Okay, let's dive into Protolabs Q3 2024 earnings call.
Yeah.
They're the rapid manufacturing,
Right.
the wizard
Yeah, the wizard.
for prototyping and short-run production.
Exactly.
You're talking 3D printing, CNC machining,
Yeah.
sheet metal, injection molding,
The whole gamut. Yeah.
medical devices, electronics, even parts for cars.
Yep.
You sent over the call transcript and some stock info.
I did.
So let's break it all down.
It is a critical one, I think.
Oh, yeah.
Especially for anyone watching the manufacturing sector.
Okay.
Protolabs is kind of seen as a bellwether
Interesting.
for the health of the industry.
Yeah, what's the overall vibe?
A little somber, to be honest.
Oh.
Manufacturing is facing some,
Yeah.
headwinds.
That's true.
But Protolabs is fighting back with a new strategy
Okay.
and some bright spots, even.
Oh, wow. So amidst the gloom,
Yeah, amidst the bloom.
some sunshine.
Some sunshine, yeah.
So revenue is flat year to date, which, on the surface,
Yeah.
maybe not so good.
Not great, no.
But their earnings per share are actually up.
This is the thing. They're up over 10%.
So how are they doing that
Yeah, right.
in a flat revenue environment?
They're clearly doing something right.
Yeah.
And I think a lot of it points to this strategic shift
Okay.
towards higher value
Uh-huh.
production orders.
They're not just about prototyping anymore.
They're not, no.
They want to be a bigger player in manufacturing runs.
Exactly.
So they're evolving beyond just that quick prototype
Yeah, the go-to for that, right?
and becoming a more integral part of the whole process.
I think that's a key takeaway here.
So to understand how this is playing out,
Yeah.
they gave some really compelling examples in the call.
Oh, yeah?
For instance, there was this clean energy company
Okay.
that needed parts for their solar and battery systems.
Right.
Protolabs, they didn't just manufacture the parts.
Uh-huh.
They went a step further and assembled multiple components, which helped the company launch their product much faster.
That's huge.
So they're not just expanding their capabilities, they're expanding the level of trust
I think that's a great point.
with clients.
Yeah, they're becoming true partners.
It's not just supplier anymore.
No, exactly.
Then there was this example of a medical device company
Okay.
that needed low to mid-volume injection molded parts.
Right.
Protolabs already had a history with them
Uh-huh.
on the prototyping side,
They do, yeah.
but they were able to leverage that relationship
Uh-huh.
and their expanded quality control
Okay.
to win the production business as well.
Interesting.
This ensured that the medical company stayed on track for their product launch.
So they're using that strong reputation from prototyping.
Yeah, like a springboard
Yeah,
to
exactly.
secure these larger, higher value contracts.
That's really smart.
And here's the one that really blew my mind.
Okay.
They're working with Harley-Davidson,
Wow.
factory racing, manufacturing motorcycle components in just a few days.
That is fast.
And Harley-Davidson seeing improvements in their race times
Because of this.
because of this super fast turnaround.
That's incredible.
So that's a testament to their speed
It is.
and agility.
Yeah.
But to achieve this level of efficiency
Right.
and scale,
Mm-hmm.
they've had to make some changes internally.
Oh.
They've restructured,
Uh-huh.
separating the regional sales teams
Right.
from a new global fulfillment organization.
And that makes a lot of sense.
Does it?
I think so.
Okay, why?
It allows those regional teams to focus on those customer relationships
Mm-hmm.
and really driving revenue growth.
Okay.
Meanwhile, the global fulfillment team
Right.
can concentrate on optimizing the production
Okay.
by choosing the best option
For each job.
for each job. Exactly.
So that could mean using their own factories
Oh, yeah.
or tapping into their network of manufacturing partners.
Their network's seen some pretty impressive growth.
Oh, has it?
Yeah. They reported an 11% increase
Wow.
in manufacturing partners year over year.
That's pretty remarkable.
It is.
Considering the environment we're in,
Right.
less than 5% of Protolabs customers are using both their factory and network services.
Yeah. So there's huge potential for growth.
Right. As they connect more customers with the full range of their offerings.
It's a smart strategy.
You're building this robust network, making sure they can leverage it.
To the fullest, yeah.
Okay, let's talk about margins.
Okay.
Their gross margins are up significantly year to date,
They are.
both for their own factories and the network side.
Impressive.
So how are they pulling this off?
Well, on the network side,
Uh-huh.
it's their AI-powered pricing
Okay.
and sourcing algorithms.
So like a system that's constantly learning,
Yes.
adjusting prices, making sure they're getting the best deal, but also profitable.
That's exactly it.
It's working.
It's working.
The other factor, though, is the manufacturing landscape.
Right.
We have excess capacity in the industry right now.
That's right.
Lots of factories.
Not enough work.
Not enough work, yeah.
So that gives Protolabs more leverage.
To negotiate better prices.
Exactly.
Which keeps those margins healthy.
They are using tech and the market conditions to their advantage.
So Q3 specifically,
Okay.
revenue down 4% year over year.
Right.
But they beat expectations.
They did.
Thanks to a stronger than expected August and September.
It seemed like they caught a bit of a tailwind there.
Yeah, but they're not getting carried away, are they?
No, they're not.
They're predicting that normal seasonal decline.
That's right.
Okay, well, I mean, we can't ignore the stock performance.
No, we can't.
It's up over 38%.
Yeah, investors are reacting to that,
I think so.
to the strong earnings and
Yeah.
the positive outlook for the future.
The market is responding to the signs of strength in spite of,
In a challenging environment,
yeah,
those strategic moves.
they're being viewed favorably.
They are, yeah.
What stands out to you as the most significant takeaway from these earnings? What's the big headline?
For me, it's their commitment to transformation.
Oh.
I mean, they're not sitting back,
Mm-hmm.
waiting for the sector to rebound.
Yeah.
They're adapting. They're investing in their capabilities,
Yeah.
making bold moves.
To position themselves for success.
Yeah, regardless of what the market throws at them.
It's about taking control of their destiny,
It is, yeah.
not just riding the waves.
Right.
So for our listeners out there,
Yeah.
here's something to ponder as you think about Protolabs.
Okay.
Their success
Uh-huh.
is inherently linked to the success of their customers.
That's true.
The more companies can innovate, get their products to market quickly,
Right.
the more Protolabs stands to benefit.
That makes sense.
So keep an eye on the companies using Protolabs as services.
Yeah.
It might just give you a sneak peek into the future of manufacturing itself.
Good point. So we talked about the big picture, but now maybe we could dig into some specifics
Okay.
of Protolabs' performance
Sounds good.
and see what we can find.
Let's start with their revenue breakdown.
Okay.
One thing that caught my eye was the decline
Oh, yeah.
in injection molding revenue.
Mm-hmm.
It was down 10% year over year
Right.
in constant currencies.
Yeah, they attributed that.
So what's driving that?
Weakness in the industrial and consumer electronics verticals.
I see.
These sectors have been hit pretty hard
Yeah,
by the economics slowdown.
of course.
So that's having a ripple effect.
Even with the strategic shift towards production,
It seems so.
they're not completely immune
No.
to those broader headwinds.
It's a good reminder that they are operating within a larger context.
Right, okay, but on a more positive note,
Yeah.
they did highlight strong growth in their network CNC machining business.
Yeah.
CNC, for anyone who doesn't know, stands for computer numerical control.
That's right.
It's a very precise way of cutting materials.
It is. It's a very high-tech process.
That's definitely a positive sign.
It is. It shows their network strategy is working,
Yeah.
that they're able to capitalize.
Yeah. On those areas where demand is still strong.
It's about being agile, being adaptable,
Yeah, finding those pockets of growth.
even in a tough market.
Exactly.
Okay, so another metric often used to gauge a company's performance is revenue per customer contact.
Right.
Now, this declined
Okay.
1% year over year,
Okay.
but we talked earlier about how revenue per customer
Yes.
is actually up 5% year to date.
Yeah, so what's the story there?
Yeah, why the difference?
That's a great question.
Is it the inherent variability in their business?
I think it highlights that, yeah.
As they shift towards more production work,
Right.
the size and timing of orders can fluctuate.
You might have a single large production order in one quarter
Right.
that kind of skews the numbers,
But when you look at the year to date,
and you get a better sense of the overall trend.
and that trend is positive,
It is.
they're successfully growing revenue per customer.
Over the long term, yeah.
It's about looking beyond those quarterly ups and downs.
Okay, gross margins.
Okay.
They were pretty impressive this quarter.
They were, yeah.
Up 50 basis points.
Sequentially, right?
Sequentially to 46.2%.
And they're attributing that
Yeah.
to improvements in both their own factories and their network.
How are they expanding margins in such a tough environment?
Well, on the factory side,
Hmm.
they're benefiting from those ongoing automation improvements
Okay.
and efficient labor management.
Constantly fine-tuning.
Yeah, squeezing out more efficiency.
On the network side.
It's those AI-powered pricing and sourcing algorithms. It's like having this super smart system that's constantly analyzing data and optimizing prices.
It's a combination of operational excellence
It is.
and smart use of technology.
Absolutely.
Now, they did mention that they expect those margins to come down a bit in Q4 due to the typical seasonality.
Of course, yeah.
But overall, they seem to be in a very strong position.
I think so, yeah.
Profitability standpoint.
It seems like they're demonstrating their business model is pretty resilient.
Okay.
That they can generate healthy profits even when
revenue's facing headwinds.
Yes.
Revenue guidance for Q4.
Right.
They're projecting a range of $115 million.
$123 million.
Which would represent a sequential decline.
That's right, which they're attributing to that normal seasonality.
Can you elaborate on that?
Yeah, so the fourth quarter typically has fewer working days.
Oh, right.
Because of the holidays.
Yeah, of course.
And they also tend to see lower order volumes during this period.
So not a cause for concern.
No, not necessarily.
It's just, typical.
It's just reflecting those typical seasonal patterns.
Makes sense.
They also mentioned that foreign currency is expected to have about a $1 million favorable impact on revenue.
Compared to Q4 of 2023.
That's right.
So something to keep in mind.
Yeah, when you're comparing year over year.
It can create some noise in the numbers.
It can.
Earnings guidance.
Okay.
They're expecting non-GAAP earnings per share between 0.28 cents and 0.26 in Q4.
So what's influencing that?
Yeah, what are the key factors?
Well, it reflects that expectation of lower revenue. They're also factoring in some one-time expenses.
Related to?
The closure of their German facility.
Speaking of that.
Yeah.
We've mentioned it a few times.
We have.
But we haven't really delved into the implications.
Is this a sign of weakness?
Yeah? Or is it a strategic move to optimize?
I think it's definitely a strategic move.
Okay.
Remember how we talked about them streamlining operations?
Yeah.
Leveraging that global fulfillment network?
Yeah, so it's not about retreating from the European market.
No, not at all.
It's about finding more efficient ways.
To serve those customers, yeah.
They did emphasize that they'll continue to offer all their services.
All their manufacturing services, yeah.
In Europe, just fulfilled differently.
Adapting to those changing conditions.
Making the tough decisions.
Sometimes that means consolidating.
And focusing resources.
On areas where they can have the biggest impact.
And they were very clear. That they remain committed.
To that prototype to production strategy.
Even with the closure.
Yeah.
So they're betting that the companies that use them for prototypes
will stick with them. Yeah.
For the larger production runs.
And it seems like that strategy is gaining traction.
It's a smart approach.
It is.
They're leveraging those existing relationships
and expertise
to expand into a larger market.
And their speed and agility, which are huge assets.
In prototyping, but equally valuable in production.
That's right.
Where time to market is critical.
It's also worth noting that the closure isn't expected to have a major impact.
Financially?
Yeah, financially.
Okay.
They said it'll be in the hundreds of thousands.
Not millions.
So not a game changer.
But it is a symbolic move.
It underscores their commitment.
To operational efficiency.
To their global fulfillment strategy.
It's a sign they're willing to adapt.
To changing circumstances.
So we've delved into the specifics.
Yeah.
Let's take a step back.
Okay.
What do these earnings tell us about the health of the manufacturing sector?
Well, the fact that revenue is flat, I think, is a reflection of the challenges. Globally.
We're seeing economic slowdown.
Supply chain disruption.
Geopolitical uncertainty.
It's all weighing on manufacturing activity.
But amidst these challenges, Protolabs is showing signs of resilience.
They are, yeah.
Their earnings growth.
Their expanding margins.
Their strategic moves.
It's a mixed bag.
Yeah.
But I think they're demonstrating that it's possible.
To navigate those waters.
Yeah.
And emerge stronger.
They're not just surviving, they're adapting.
It's a testament to the power of technology.
It is. Their digital manufacturing capabilities are a key differentiator.
So what are the big questions going forward? Will this shift towards production continue to pay off?
Will the manufacturing sector recover?
Those are the million-dollar questions.
They are.
But one thing's certain.
What's that?
Protolabs is a company worth watching.
Absolutely.
They're at the forefront
of the digital manufacturing revolution.
They're likely to play a key role in shaping the future of the industry.
Their journey will be fascinating to follow.
We've covered a lot of ground.
We have.
But there's still more to explore.
There is.
Join us in part 3,
where
we'll analyze their cash flow, balance sheet strength, We'll also discuss their stock performance in more detail.
And those long-term growth prospects.
Stay tuned. Welcome back to our deep dive into Protolabs.
Yeah.
Q3 2024 earnings.
We've covered a lot.
We have.
Now it's time to look at
the financials.
The financials.
And what it means for investors.
Cash flow,
yeah.
Balance sheet, and of course the stock.
And those long-term prospects.
Exactly.
Let's start with cash flow. Protolabs had a really strong quarter.
They did.
Generating $24.8 million.
In cash from operations.
Yeah. They highlighted it was their highest quarterly figure.
Since 2020.
Since 2020. Before
they acquired 3D Hubs.
So even with revenue being flat.
It seems like they're running a tight ship.
Yeah, operationally,
yeah.
Making smart decisions.
Resulting in a healthy cash position.
And having that cash gives them options.
It does.
They mentioned using that cash flow to invest in growing the business organically.
Right.
And also to return capital to shareholders.
They did.
They repurchased $19 million.
Of their own stock.
In Q3.
That seems like a pretty strong vote of confidence.
It does, doesn't it?
Share repurchases can be a way to increase the value.
Of the remaining shares.
Exactly.
Like saying, hey, we think our stock is undervalued.
We're buying some back.
Makes sense, okay.
Balance sheet.
Balance sheet, which to me looks rock solid.
It does.
$117.6 million in cash and investments.
Zero.
That's a pretty sweet spot to be in.
It is, especially with all the uncertainty.
Yeah, gives them a cushion.
Good cushion, yeah.
To weather any unexpected storms.
But also the resources to,
seize those growth opportunities.
Exactly.
Positions, investing in new technology.
Expanding into new markets, yeah.
Speaking of growth, we talked about how their stock is up.
Over 38% today.
What's your take on that?
I think it's a sign that investors are excited about those earnings and that outlook.
But looking beyond the immediate reaction...
I think they're well positioned.
For long-term growth.
I think so, yeah.
Strategic shift toward production.
Expanding network.
Strong financial foundation.
Those are all positive indicators.
Of course, they're not operating in a vacuum.
Right.
The health of the overall manufacturing sector.
It's going to play a role.
But even with the challenges...
there are pockets of growth and innovation.
And Protolabs seems to be finding them.
They do.
And as we said... their success is tied to their customers' success.
Sure. If their clients are thriving...
pushing boundaries...
Protolabs is likely to benefit.
It's a win-win situation.
It is.
Any final thoughts?
Protolabs is a company to watch.
Okay.
They're adapting, embracing new technologies.
Making those strategic decisions.
That position themselves.
For long-term success.
Keep an eye on them.
You might just get a glimpse into the future.
Of manufacturing itself.
Thanks for that analysis.
Of course.
And to our listeners.
Yes.
Thanks for joining us.
For this deep dive.
Into Protolabs Q3 2024 earnings.
We'll be back next week.
With another earnings call breakdown.
Until then.
Keep learning. Keep exploring.
And keep diving deep.